Back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Do me a big favor, guys. Get yourself down in the description box and check out those 3 links I got down there. The first one is going to be that Moo link. The good folks at Moo are willing to give you some goodies, man, if you open up a new Moo brokerage account. Now, of course, you got to make some qualifying deposits in order to qualify for the goodies. But listen, man, they're pretty nice goodies. Let me walk you through them. The first one is Moo is offering up to $1,100 in cash reward / NVIDIA stock shares. Here's what you got to do to qualify now. Remember, you got to make a qualifying deposit. So let's tackle the first qualifying deposit, which is $1,000 deposit. And in turn, Moo will give you a $120 cash reward. Now, $100 of that $120 is specific to my channel, my link. So if you want to get the full 120 from Moo, of course, you got to have a qualifying deposit in your new Moo brokerage account of $1,000. Then you got to click on my link down in the description. First link, get yourself $120 in cash reward with a $1,000 deposit. Now that's limited time offer, so don't delay, act today. Now let's move on to the second piece, which is the NVIDIA stock shares. If you make a qualifying deposit, you can get up to $1,000 in NVIDIA stock shares. So those are your 2 offers that Moo is offering you guys if you open a new Moo brokerage account and you agree to make qualifying deposits. So don't delay, act today. Get yourself down in the description box and click on that Moo link. Now, the second link down there is the Wealth Builders Financial Community on Patreon. That's my community that I started back in 2024. Why did I start that community? Because I wanted to have a community of like-minded people chasing financial freedom, that we could all work together to catch financial freedom. See, it's always better to go together. You go farther. You go alone, you don't go that far. See what I'm saying? So for me, forming this community so that I could go far. I know if I could gather people with different ideas from different backgrounds, different investment experience, I know we would all come together and just help one another. That was my vision, and that's what's happening. Again, no experts there. None of us are experts. None of us try to tell you what to do. We're just regular people, man, trying to build wealth and get to passive income. That's all we're trying to do. Long-term investors trying to get to passive income. Tonight, 8 p.m. Eastern time, we have a live stream, which we do every Monday at 8 p.m. Eastern time. So if you join us tonight, boom, come on in the live stream. We also have a community chat every single day where we're sharing ideas and best practices, tips and nuggets, what's working, what's not working, helping one another to build wealth. No experts, just giving out information and giving out what's working for us so that others may go research it and could try it for themselves. So if you want to be a part of that, man, plus, last thing, you only get access to me through the Wealth Builders. If you want to DM me or send me an email or any of that kind of stuff to pick my brain for my 30 years worth of experience, no expert, but just got 30 years worth, can't do it unless you're on the Wealth Builders Financial Community. So click on that second link, come join us. Third link, and then we're going to get out of here, is the Webull link. Again, Webull is a self-directed brokerage app as well. I've been rocking with Webull since 2021. Check that offer out as well. Third link down in the description box. All right, let's dive into this thing. So stocks took a tumble today. And let's talk about that. Why did, the market get off to a good start this morning? And again, guys, this is not financial advice. I'm not a financial advisor. I got to keep telling y'all this, and I got to keep telling the algorithm this so nobody gets a misunderstanding here. I don't need no misunderstandings from the algorithm, nor do I need any misunderstandings from you guys. No misunderstandings. I'm not a professional. I'm just a regular guy who goes out, does research, looks at articles, and I've been doing this for 30 years, investing on my own with no help, and I build a level of wealth. That doesn't mean I know everything, because I don't. Now, that's all this is. So please go out and do your own homework, your own research before you make any investment decisions. Also, if you're not comfortable making investment decisions, go get you a financial advisor, a real licensed financial advisor, because I'm not one. Now, here's the thing. This morning, we talked about interest rate cuts. We talked about that this morning. That's on the table for Wednesday, February 10th. Widely expected, 85% chance that the Fed will cut rates by 25 basis points. So market starting off the week hot, and then all of a sudden cooled down, started dipping a little bit. Let's walk through why. Let me read you a little something, and then I'm gonna give you my opinion. Again, constitutional right, First Amendment, freedom of speech. That's what I'm gonna do. I'm gonna give you my opinion, freedom of speech. If you don't like it, go do your own research, come up with your freedom of speech, right? Here we go. S&P 500 closes lower as investors tap the brakes before Fed decision this week. See, we get off to a pretty good start, and then what do investors do? Halfway through the day, started tapping the brakes. Oh, let's hold up. So something's happening to make investors tap the brakes. Let's find out why these investors are starting to tap the brakes. So here we go. The S&P 500 pulled back on Monday as investors awaited the Federal Reserve's last meeting of the year later this week. Later this week means Wednesday, December 10th. 2 p.m. Eastern time, the Fed will make a decision on rates, whether they're going to decrease rates by 25 basis points or keep rates where they're at. Or could they even increase rates? Now, the likelihood of increasing rates is not good. It's zero. That's the likelihood. The likelihood that they keep rates right where they're at is about 15%. The likelihood that they decrease rates by 25 basis points is around 85%. So, but yet and still, you get a tapping of the brakes today by investors. Let's find out why. The broad market index fell 0.35% to close at 6,846 points. Let's stop right there. Go back to January 2nd, 2025. What was the S&P? What did the S&P 500 index close at? It was about 5,800 points, guys. So in less than a year, you're at 6,846 points. Now, I'm not very good in math, but with my limited capabilities with math, I can do the math on this. Now, the last time I checked, 6,846 is higher than 5,800. That's the last time I checked. Y'all drop me a comment if I'm wrong on that. But the last time I checked, 6,800 is higher than 5,800. So, yeah, y'all know where I'm going with this. It's been a pretty decent year. Not a blockbuster, but a decent one. Let's keep moving. While the NASDAQ composite slid to 0.14% to settle at about 23,545. Pause there again. Let's go look at the NASDAQ on January 2nd. Just want to walk y'all through this. What was the NASDAQ on January 2nd, 2025? Just want to walk you through this, guys, because we got to understand this. Now, on January 2nd, 2025, the NASDAQ closed at 19,280 points. Let's go back to today. It closes at 23,545 points. Again, not very good in math, but the last time I checked, 23,500 is higher than 19,230. Last time I checked. Okay, let's keep moving. The Dow Jones Industrial Average shed 215 points, or 0.45% to finish at 47,739. Okay, let's go look and see what it did on January 2nd. What did the Dow Jones Industrial Average close at on January 2nd, 2025? Here we go. On January 2nd, 2025, the Dow closed at 42,392. Now let's see what it closed at today. Today it closed at 47,739. So we're almost 5,500 points higher, guys, in the Dow in less than a year. You see where I'm going with this? All three major indexes are up this year, guys. If we go look at 2023, 2024, no expert here, but I think if you go back and do the research on it, it also closed up all three major indexes in those years too. Matter of fact, the S&P 500 closed at a 20% ROI, 23 and 24. Probably won't do that this year, but still, if it closes up around 14, 15%, I think that's still a win, guys, because we had Liberation Day, remember? We had the Liberation Day debacle in April. So let's see. Let's see exactly what the S&P is year to date. Just trying to get you guys to understand the magnitude of this thing, man, and what opportunity awaits us if we're, executors. So let's look at year to date. 16.66%. We might get to 20% by year end, guys. We may have a hat trick. We may have a hat trick in the S&P 500, guys, a hat trick. Some of you guys know what that is. 3 in a row, baby. A hat trick is 3 in a row. We might have 23, 24, and 25 where the S&P 500 goes over 20% ROI. That's a hat trick. All I'm saying, guys, is this notion of the stock market is some crazy thing. I'm just telling you guys, you got to go do some research. This thing is for real. So even though the headline says S&P 500 closes lower as investors tap the brakes, don't take that, too far, guys, because when you go look at the numbers, when you go look at the history, S&P up 16, almost 17% this year, even with Liberation Day. Just saying. Weighing on stock sentiment was the 10-year Treasury yield continuing its recent run higher. That's not good news. Now, if you go out and buy a 10-year Treasury, maybe that's good news. But for investors, that's not good news because typically investors don't like that. We don't like that. Why? Because if I can get a 5% yield on the 10-year Treasury, I may say, you know something? I don't want to invest in the stock market. I'd rather take this bird in the hand than 2 in the bush. See, the 2 in the bush is unknown. The stock market is volatile. It's unknown. Nobody knows what will happen. But if I get a 5% yield on a 10-year Treasury, that's guaranteed, baby. Bird in the hand is guaranteed. 2 in the bush is not guaranteed. That's the stock market. So anytime you start seeing these treasuries go high, that's competition for investors in the stock market, guys. Again, man, just my opinion. You guys go do your own research. My opinion is that's not a good thing for investors like you and me. I'm talking about stock market guys and gals, people who are in equities. You get these treasury years starting to go up. Investors start to thinking, boy, that 5% or that 4.5% look pretty good. Why don't I allocate some money to that sure thing, that bird in the hand thing, then it's 2 in the bush? All I'm saying, guys, is you got to think about that, right? So weighing on stock sentiment was the 10-year Treasury yield continuing its recent run higher. The benchmark has moved up this month despite the likelihood that the Fed is going to cut this week as investors worried about the state of inflation in the new year and whether the central bank will be able to continue easing. We talked about that this morning. Yeah, they're going to continue easing, in my opinion now. First Amendment right. Freedom of speech. Just letting the algorithm know, just letting y'all know. This is just my personal opinion, right? Got that freedom of speech thing. I love that. I believe that's the First Amendment. Y'all correct me if I'm wrong. I'm not a constitutional scholar. I'm just an old regular guy here on YouTube trying to get to this freedom thing and this passive income thing. And I like to share my opinions with y'all. That's all. No big deal. But back to what we were saying. Traders have grown increasingly hopeful over recent weeks that the Fed will lower interest rates. Once again, after it issued a 0.25 percentage cut at its meeting in September and October, according to CME's Fed Watch tool. Fed funds futures are pricing in roughly 89% chance of a decrease, up from under 67% a month ago. So it's pretty much a foregone conclusion, guys, that the Fed will cut rates on Wednesday. Now, no guarantee, but you look at what the experts are thinking. The experts are almost at a 90% we getting that cut. Now, remember, I just told you a few seconds ago that investors are worried that we may not get any rate cuts in what? 2026. But as I told you guys this morning, I'm of a different belief because I've been watching and listening to President Trump all year long hammer Fed Chair Jerome Powell not lowering rates. See, Trump wants interest rates at least 200 basis points lower. So if the Fed funds rate right now today is what? 375? Trump wanted at least 175. Like we talked about this morning, if you guys were rocking with me this morning, you'll know I mentioned when rates go down, assets go up. I'm no expert, just go look at the history. Go look at the 2020 pandemic when interest rates went to zero. Go look at it. Just go do the research, guys. See, one thing we got to learn how to do is go do research and critical think. See, it's not good enough, guys, to come on YouTube or TikTok or Instagram and listen to your favorite person and then, okay, that's the gospel. Oh, I'm off the hook. I ain't got to do no research because I listen to my guy. I listen to my girl, and she got me straight. I'm going to go ahead and make my decisions based on that. That's a no-no. You often end up losing that way. What you should do is when you gather information, you should then go out and do your own independent research. See, that's what I did. I said, okay, let me go do this research and figure out in 2025, what did President Trump say about reducing interest rates? That's all you got to ask ChatGPT or Google AI. That's it. Go and type that in and hit enter. Boom, they'll give you all the information consolidated. It's on record that he wants rates down lower than they are today. So what does that mean? Next year, for interest rates, they're coming down. Well, Richard, how do you know that for a fact? I don't know it for a fact. But what I do know is Jerome Powell will not be the Federal Reserve Chairman after May of 2026. His term is over. And guess who gets to appoint the new one? President Trump. And guess who gonna go get who Trump gonna put in there? A 1,000, 10,000% loyalist to him. Whatever he tell them to do, they're gonna do. Yeah. So I believe next year, 2026, is gonna be a monster year for interest rates. But again, back to that constitutional right, First Amendment, freedom of speech, just giving y'all my opinion. Don't mean it's gonna come true. So let's keep moving. The increasing optimism has recently been reflected in stocks, which scored their second positive week in a row. Let's go back to November. No, not even November. Let's go back to September. Normally in September is where you get a dip season. Normally every year, September is the worst month in the stock market. Normally, go back last 5 years, go check it out. On average, I believe it's a 4% negative over the last 5 years in September. Up until what? This year. This year, we posted a positive in the stock market in the month of September. So we still needed that dip month. Remember, we still need the dip month on the back half of the year because we always get that. Again, no expert here, go do your research, but that's my opinion. Second half of the year, we always have a dip month, and normally September is dip month. Now, why is September the dip month? Based on my opinion, is because investors want to have the fourth quarter of the year so that they can position themselves, make a little money, maybe take some profits, but then get ready for 2026, the next year. So normally September is the last month of the third quarter of the year. That's normally your dip month. But this year wasn't a dip month. Remember, because we had Liberation Day, things got thrown off a little bit with Liberation Day. So instead of September, end of the third quarter being our dip month, it slid itself all the way up to the fourth quarter and boom, settled on November. We still needed the dip month. We just got it in November this year. So November was dip season. A lot of opportunities. Hopefully some of y'all executed and planted some seeds. I certainly did. So having said that, these last 2 weeks have been great. We started seeing the momentum pick up at the end of November, and then it carried on into this first week of December. And then by Friday of last week, things started moving positively and strong, in my opinion. That's what they're talking about here. The market action you've seen the last 1 or 2 weeks is kind of essentially baking in the very high likelihood of a 25 basis point cut. This is coming from an expert, chief investment officer at Integrated Partners. For some very unlikely reason, if they don't cut, forget it. I think markets are down 2 to 3%. So now what do you got going on? You got some people hedging, right? You got some investors out there hedging, saying, okay, we know there's an 89% chance the Fed gonna cut, but what if they don't? Let's hedge against they don't cut. So some people may be saying, okay, let's get out of here a little bit, move some stuff over here just in case something crazy happens. We don't want all our eggs in one basket. That's what I think some investors are starting to do right now. They're starting to do what they call de-risk. They're starting to de-risk the portfolio in the event the Fed pull a 3-card Monte on us and don't cut them rates on Wednesday. They don't want to be caught with their pants down as the market starts tanking. They don't. You heard what the expert said. If they don't cut, you can expect a 2 to 3% dipsy. Now, this is coming from one expert. Now, I don't know if that's true or not, but I'm saying it makes sense to me when I got the logical side of my brain on. It makes sense to me that people will start pulling some of their eggs out of that basket and put them over in another basket. Not all of them, but some of them. That makes sense to me. That's actually pretty smart. That's prudent. Now, I'm not a big boy investor, though. I'm not a hedge fund. I'm not an institutional investor. I'm not a billionaire. So I don't have the insider trading stuff they have to make that decision. What I have to do is just say, no, I'm going to stay in the market and ride this thing out. And if there's a dip season to the tune of 2 to 3%, I'm going to take some of this dry powder I got on the sideline and I'm going shopping. Because see, I can't try to time the market like the big boys can because they got information that I don't have. All I got is my cell phone. That's not enough. All I got is the cell phone and ChatGPT. That's all I got. ChatGPT and Google AI. I'm not trying to time the market with those tools. What I'm going to do is time in the market and keep some dry powder on the sideline. So if there's a dip season, if the Fed don't cut these rates and things go to dipping, guess what I'm going to go to doing? I'm going to go shopping and pick up some discounts. That's my game plan. What's your game plan? What you gonna do? Are you ready for what's getting ready to happen on Wednesday? Or are you gonna sit on the sideline? You gotta answer that question. Here we go. Beyond the anticipated cut, this is what the expert says. Fed Chair Jerome Powell to emphasize a data-dependent stance for the months ahead, especially given that last week's November ADP data showed even more of a labor market slowdown. Not only that, Powell's term expiring in May 2026 could make him kind of agnostic toward market expectations regarding next year's rate path, he added. But as far as I'm concerned, I don't care what Powell thinks, because he gonna be out of there next year. He got 5 months left. That's it. Boom, he gone. The last 7 months of 2026, Trump bringing them rates down. Again, First Amendment right, freedom of speech, just my opinion. You may think differently, but I'm gonna position myself for 2026 because I think Trump gonna take the lid off this thing and this thing gonna explode. Once Trump take the lid off, this thing, who knows where this thing might go once Trump take the lid off. Trump can take the lid off, right? So I don't care what Powell does. I still believe they're gonna cut rates on Wednesday, but they may not, guys. I don't know. But I'm just gonna stay in the market. I don't care what they do. I'm staying in the market. I ain't moving, I ain't selling nothing. I'm staying in the market. And then if they do go lower, I'm going to the dry powder well, and I'm gonna take some of the dry powder out the well and go shopping, little Christmas shopping. Because I believe next year when Powell is out of there and Trump put his own people in, the market gonna go crazy. Because see, investors, big boy investors already know what Trump wants. Big boy investors, in my opinion, First Amendment right, Constitution, I believe it's the First Amendment, freedom of speech, just my opinion. But I believe big boy investors already know what Trump gonna do with interest rates next year. They already know he's gonna take the lid off the thing and this thing gonna go crazy. I think they know that because they understand that the 1%ers don't care anything about inflation. Only people care about inflation are people that ain't got no wealth and ain't got no money. And ain't, the people who, that's who worry about that. The people up here with all the wealth and all the assets, they don't worry about inflation. That's why every day you turn on the TV and you go to these corporate or these cable news networks for like finance, and you see Trump people on there. What do every one of them say? Economy's great. Inflation has been defeated. We're bringing in trillions and trillions of dollars. Tariffs are going to be great. We're not going to take our foot off the tariff pedal. They say that every day, guys. Every day. So that should tell you something. These people don't care about you, man. I'm not just talking about the current administration. I'm talking about the 1% in general. They don't care about your burdens down here. So you should start figuring out a way to build yourself some wealth. You should start figuring out a way to live on less than what you make. Live on a plan. Stay out of consumer debt. Save and invest. Right? Nobody's going to do that for you. Your government's not going to save you. Not in these next 4 years. You got 3 more years of this. 3 more years, you're going to have people coming on here. I guarantee you next year in 2026, they're going to come on TV and they're going to say the same thing. Economy's great. We're bringing in trillions and trillions of dollars of investment. We're bringing in billions and billions of dollars of tariff revenue. Oh, by the way, we're going to give you a tariff rebate check. They're going to tell you all that every day, all the time. Why do they do that? Because they understand if they tell you something every day long enough, subconsciously you start believing it. And then you don't blame them anymore. You find somebody else to blame. Or you blame yourself. It's psychological manipulation. It's psychological 3-card Monte. That's why they come out on TV every day, guys, and tell y'all everything's great, economy's great, jobs are great. Oh, also what they tell y'all is, don't worry about it. We know 2025 has been a rough year, but 2026 is going to be your year. 2026 is going to be Main Street's year. Listen, man, Y'all better start critically thinking and going out and doing your homework and understanding what these people doing with this psychological 3-card Monte they doing on y'all every day, telling y'all how great everything's are and all this other crap. Guys, go look, listen, if you don't believe me, go out on Google, Chat GPT, and type in psychological manipulation. What are the signs of psychological manipulation? It's telling you something every single day that they know is not true, but they tell you it is every day, because eventually if you hear that enough, you believe it, or you normalize the things that they do. And now it becomes normal. It's like a habit. Oh, they ripped somebody out of their car and dragged them down the street. Oh, that's normal. A year ago, that would have been an outrage. It would have been outrageous. Now that's normal. See where I'm going with this? Same thing with this wealth thing. They tell you all this stuff long enough, y'all start believing it. Subconsciously, you believe it. You let them off the hook. You go to find somebody else to blame. Well, they wouldn't lie to us every day. I guess gas prices are down. Oh, I guess egg prices are down. Oh, I guess inflation has been gone, but yet it's still, inflation has grown by 3% this year, guys. 3%. Yeah. Year over year, it's up 3%. But they tell you all it's non-existent. So all I'm telling you guys is 2026, in my opinion, is going to be a breakout year. That's my opinion. First Amendment right, freedom of speech. You go out and do your own homework if you don't agree with it. I'm okay with that. I would not be surprised for Jerome Powell to be like, we've cut, and now we're in a place where we really need to watch the data. And he'll stop just short of being hawkish. Basically what he said, Powell could come out and just say, no, we ain't cutting. We happy where we at. Because he know that's going to do what? Pee off Trump. But what does he got to lose? Now, I know he ain't that petty, but you got to understand where these people going with this, right? I don't think Powell that petty, but makes sense. So be prepared for anything. So he says, and he'll stop short of being hawkish because we have seen the softness in the labor market. The investment head said, if you start to see rate cuts get pushed out further into 2026, then you should start to see, I think, more negative pressure on the market in the first half of the year. So it's important that we get this rate cut according to this expert, because if not, that first quarter of 2026, there's going to be pressure on equities. At least that's how I'm interpreting. You guys might feel differently. Go out and do your own research. During Monday's session, technology was a strong spot. Broadcom shares jumped almost 3% and hit a new record high on the heels of the information reporting that Microsoft is discussing designing custom chips with the chip maker. Meanwhile, Confluent shares surged around 29% after IBM said that it's going to acquire the company in an $11 billion deal, which is expected to close by the middle of 2026. Oracle shares increased more than 1% amid investor optimism ahead of the company's quarterly results on Wednesday. There you go, guys. Just wanted to give you a little update, man, on what's going on. For me, what's the game plan? Dollar cost average in on the 15th of every month like clockwork. I don't care if it's up or down in the market, sideways. Do not care. I got 9 more years to get every ounce of wealth I can get out of this thing. And I believe investments I make today will pay off for me in the long run. So the dollar cost average wealth transfer blueprint 1.0 in effect. Dry powder on the sideline to take at opportunities like dip season. If this guy is right, the Fed don't cut, we get 2 or 3% dip season, swoop right in and pick me some up, put them in the portfolio and just sit there and wait for the rally. Don't know when that's going to be, but I believe it's coming. I believe if it don't happen in the first quarter of 2026, it's definitely gonna happen in second quarter because Trump gonna be put in a new Federal Reserve chair and the market gonna go ballistic. That's my opinion now, because they already know Trump is pro interest rate cuts. The market already know that. So I don't care what the market does the rest of this year. I just gave y'all the numbers on what the market did this year, the 3 major indexes. All of them are in the green. S&P 500 year to date, 16.66%. This has been a fantastic year for me. I don't know about you. Been a fantastic year. So these last 2 weeks, if we don't do nothing, who cares? I got the dry powder on the sideline. You want a dip season? I'm right in there getting the dip season, getting the discounts. And I'm just going to hold them. Because I know by June of next year, when that new Fed chair get in there, that Trump going to handpick, and he going to be a 10,000% Trump loyalist, this thing going crazy. It's my opinion now. First Amendment right. Freedom of speech. You go out and go ahead and do your own research. Just got to give the algorithm that little reminder. Just got to get an algorithm a little reminder. Freedom of speech, First Amendment right, constitutional right to give my opinion. I'm not an expert. I'm just a guy giving his opinion. Like I said, guys, if you want to get yourself some fantastic opportunities, get yourself down in the description box, click on those first 2 links. That first one is that Moo link, which is a self-directed brokerage app that I've been using since 2024. Millions and millions and millions of people use that brokerage app, certified here in America to be able to use and all that good stuff. So go do your homework on it. But they got some goodies for you if you decide you want to take advantage of them. Here are the goodies. If you open up a new Moo brokerage account, Moo is offering you up to $1,100 in cash rewards / NVIDIA stock shares. That's right. That's what the folks at Moo are willing to do if you make qualifying deposits. Let's break it down into 2 pieces. The first piece, if you make a $1,000 deposit in your new Moo brokerage account, they'll give you $120 cash reward. Limited time offer. You have to have a new brokerage account and you have to make at least a $1,000 deposit. And that's unique to my channel, that link. If you go directly to them, boop, you don't get that. You'll get the $20. But if you use my link, they throw in an extra. And again, guys, this is all above board. Go click on the link. Go do your research on Moo. All certified, great self-directed brokerage app that I've been using since 2024, and millions of other people use it. And they advertise right here on YouTube. Yes, they do. So you know YouTube wouldn't have them on here advertising if Moo wasn't legit. They're legit. So go check them out. Do your own homework. If you feel like it's something that you want to take advantage of, then click on the link and take advantage of it. Now, another qualifying deposit gets you up to $1,000 in NVIDIA stock shares. Again, deposit requirements are in effect. Get down to the link, click on it, figure out what those are, meet the requirements, and you're good to go. Second link is the Wealth Builders Financial Community on Patreon. That's the community I started back in 2024. All we do in that community is help each other build wealth. None of us are experts. None of us don't try to be experts. We're just regular people helping one another try to get the financial freedom and passive income. If you want to join us, click on that second link. It'll take you over to Patreon and come check us out. We got a live stream tonight at 8 p.m. Eastern time for those of you that want to participate, but you got to be a member of the Wealth Builders to participate. Beautiful, beautiful Q&A we're going to be doing. We do it every Monday night. Wealth Builders come in there and we just share ideas. It's a good time. It lasts for about an hour. Also, we have a community chat that runs every single day. Live community chat where people are dropping in nuggets and tips and best practices and what they're doing and what they're not doing. So that may be a good option for you as well, just to soak up information that gives you ideas. I don't know. And then you get access to me at the Wealth Builders, where if you want to send me a direct message, unlimited direct messages to me, where you can ask me questions about my experience and what I'm doing and what I'm not doing. Again, not an expert, not a financial advisor, so I can't tell you what to do. But what I will share with you is my 30 years of experience, what I've done to build my wealth and put me in a position where I control 100% of my time and my financial destiny. So if you want to rock with that, click on that link and get yourself over to the Wealth Builders and sign up. Appreciate y'all, man, for stopping by. And if you're stopping by for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you guys on the next video. Peace out.